Good morning, ladies and gentlemen, and welcome to the RIU Sydney Resources Roundup. Thanks to Chrissy for her welcome to country. Also, thanks to Shane and James and Matt, the AV team. They do an outstanding job for us for that terrific video. Now, it's great to see so many familiar faces here. And some of you know that Vertical Events likes to pick a song, bit of a theme generally with the conference. And so I guess some of you are thinking, I reckon they went with that song because down by the harbour, and there's the harbour. Well, that's not the reason. The reason is because just recently, last month, we held a show in Singapore, and we're in this international jurisdiction, and suddenly all these keynote presenters from other parts of the world are up and they're giving presentations, and they're talking about Australia and how rich we are with all these resources. And it got me thinking, gee, sometimes I think we're all so busy that we just take for granted how lucky we are to be in this great country. To think that this country is the #1 producer of iron ore, top 3 in the world for gold, top 5 in the world for coal, top 10 for natural gas, and #1 in the world for LNG gas. It's outstanding. When you think of iron ore, it's so important. It funds the country, the royalties, the taxes that all come through that allow us to have, great systems in place for social services and whatnot. And then there's gold. I was listening to a podcast just recently, and it dawned on me how significant gold is. In 1851, the population of Victoria was 7,000 people. No one wanted to go there. It was just the convicts, literally. Like there was a couple of 100,000 up in New South Wales and just 7,000 people, 1851. And then they wandered up to Bendigo and Ballarat and they found the gold. In 2 years' time later, their population was 550,000. And Melbourne was considered the richest city in the world. And you can see that gold puts your country on the map. It's such a significant commodity. And us West Australians, and we'll hear from Euroz in a sec, we're really lucky because Western Australia just has it all. We have the gold, we have the iron ore, and we have it all. But the world is transitioning in regards to energy. Very slowly, we're moving away from the demand for fossil fuels. That could have a major impact on a country who is already in the top 5 of the world for coal and right up there when it comes to gas. But we're protected. We're going to go down the renewable energy path, and we're the #1 producing country in the world of hard rock lithium. So we're well placed. If they want to go down wind energy, well, Australia has some of the windiest places in the world, so we'll build the wind farms. Then if they talk about solar, that's okay, because there's a fair amount of sunlight that happens in Australia. So we'll be protected from there. So the reason for the song was just to remind us how lucky we are to live in this great country and also to be part of a resources industry that is just ticking along extremely well. It's not often that you get base metals and also gold moving in the same direction. So I'll let the experts later on in the day talk about that. But a conference like RIU Sydney Resources Roundup doesn't exist if you don't have outstanding support from the sponsors. And it's great to have the Euroz team on board. As you know, RIU, Vertical Events, bunch of West Australians. So to have the Euroz team here in Sydney as our major sponsor, we really appreciate it. And Tim and his team will be up giving a presentation shortly. So thanks to Euroz. ABC Refinery, wow, what a market for them at the moment. Some would say it'd be gold, but it's good to have Nick here. He'll be presenting after morning tea. ABC been a great sponsor of RIU, both at our Explorers Conference and also at Sydney for a number of years. The Lynn Partners, Jeff Easton sponsors all of our conferences. Doesn't often get to come over from New York, but I think he's got a colleague in Mark who'll be wandering through the event over the next 3 days. CRU, another terrific supporter of Vertical Events and RIU. It's great to have Micromine here for the first time. Looking forward to their support for many years ahead. Something different, we've got Ricky from Shares in Value and East Coast Research. If you get a chance, have a chat to them. The first time they've sponsored an RIU conference, so it's good to have them here. I'm sure some of you will have already tasted the coffee that ALS have got on down at the back end of the room, so make sure you get down there. We've got the Lanyards sponsor in Metz, so thanks a lot, tremendous supporters over many years. Chrissy will hold up the notepad that's right next to her. Thanks to Max Geo and the notepads. It's a pretty cool one. Thanks to Firetail and Firebird Metals. They're offering some cold bar, non-alcoholic drinks. So just around the corner, just out there, some sparkling waters and juices. Thanks to their support. It's very important in this day and age to have an ESG sponsor. So we thank Social Suite for their support, and they'll be holding a workshop behind us on Thursday. This was great to have Misha come out from LA. He runs the Precious Metals Summit group. They have conferences in Colorado in a place called Beaver Creek. They also do conferences in Switzerland. And they're helping us with a bit of a one-to-one meeting platform between the companies and investors. So thanks to Misha for coming all the way from LA. And then there's our great media partners. And these media partners have stood the test of time for us. We've got Wally Graham from the Resources Roadhouse. He'll be roaming around and getting a lot of content and videos. And we thank Wally for his great support. And then there's Dave Tasker and Jed from Chapter 1. They've been with us forever like Wally, so we really appreciate the support. They're running the live streaming, and we'll get to the #1 person who is live streaming that at the moment in a sec. And White Noise brought Amali and her team on board. Not only are they helping from the media and the social media side of things, but they're also the water bottle sponsor. So you'll see their water bottles around the room. Make sure you use those. Then we've got a lot of company sponsors. Thank you so much to all the companies who are sponsoring this conference and the supporters. Now, before I close and pass the microphone over to Chrissy, as some of you may be aware, we're missing someone extremely important to our organisation. Stuart's not here for this trip. First time he's missed the RIU Sydney Resources Roundup since the first one in 2004. So he's never missed one until now. Unfortunately, his doctors have just recommended that he doesn't fly over, doesn't do any flying for the next couple of weeks. He's fine, but that's the recommendation that surprisingly Stewie's agreeing with the doctors. He doesn't normally do that, but that's good to see. But it's great to see the RIU team here. We've got Simon Hadfield. He's been with Stewie forever and a day. They started the RIU Good Oil back in 2001, and they've done an outstanding job together. And also Stewie's son, AJ, who's just recently come on the board at RIU. So good to see those guys. I've probably taken up all of Chrissy's time. I'll hand the microphone over to the greatest MC. She's now international MC because she was over in Singapore doing a great job just recently. So
give that to me. Go and sit down. Would you put your hands together for Jaxon, everyone? Yeah, I had this fantastic intro constructed, but it's gone now because as Madam Lash, as those of you who know me, my job is to keep us all in time. And I've got 90 presenters coming up on stage here to present to 1,500 delegates. And if I don't keep to my own rules, which is keep to time, we'll be in a bit of trouble because there's lots to get through. So I'll have plenty of opportunity to speak to you over the next 3 days and we will converse about what's happening. But I think it's best that we get started straight away. So I've got two fellows down there. I've got a double act to start off the conference in 2023. Euroz Hartleys, as Jaxon mentioned, is our major sponsor in 2023. And of course, that gives them the right to set the tone for this conference and to lead the discussion. Tim Bunney is MD. He's going to take to the stage first. He's going to take exactly 2 minutes of your time up. He will then hand the ball on. He will introduce you to a young fellow called Michael Scantlebury. Michael is one of the senior resource analysts. He has 18 minutes to talk to you about the largest macro trend affecting the resources sector moving forward. And again, Jaxon did allude to it. It was what we were talking about and focusing on up in Singapore at the conference that we recently held up there, the energy transition super cycle. So without any further ado, with their 20 minutes starting as we speak, would you please welcome Tim to start the scene for our conference?
Thanks very much, Chrissy and Jaxon. 2 minutes to set the tone for a 3-day conference. That's a bit of pressure. Well, I'll try. So as Jaxon and Chrissy mentioned, my name's Tim Bunney. I'm the managing director and head of institutional sales at Euroz Hartleys. I'm pleased to welcome everyone today to this landmark Sydney conference, the RIU Resources Roundup. A special thanks to Jaxon and the team at Vertical Events, not only for putting on the conference over the next 3 days, but allowing Euroz Hartleys, many of which the team are in the room today, to be the major sponsor. For those who are not aware, Euroz Hartleys is a proudly West Australian firm. We are specialists in private wealth, institutional sales, corporate finance and research. We're listed on the ASX. Our ticker is EZL. Market cap 200 million with cash and investments of 100 million. Shortly, you'll hear from Michael Scantlebury, one of our senior resources analysts at Euroz Hartleys. He has 10 years experience, many of which were spent as a geologist. As I'm sure Michael will articulate, we remain incredibly optimistic about the resilience and the outlook of the resources market globally. Although the current inflationary environment has put pressure on margins, it's created a strong backdrop for commodity prices more broadly. The decarbonisation and electrification thematic that has emerged has coupled with significant underinvestment, which I'm sure we'll hear from many of the presenters over the next 3 days, bodes well for commodities in our opinion. All this considered has seen the rise of the materials index in the small ordinaries to 26% calendar year to date. We've seen an uptick in capital raised in the December and March quarters from its lows in September 2022. We continue to see a strong focus from investors on execution and asset quality. Last week, Euroz Hartleys released its third quarter trading update to the ASX. For the last quarter, we raised for 15 corporate clients with a total of $611 million. We believe the market remains open for quality projects with strong management teams. To that point, key Australian institutions, some of which are in the room today, have publicly called out for further consolidation in the resources market. With organic production profiles under pressure and well-capitalised balance sheet from the majors, we continue to see a thematic of acquiring over exploring. For that reason, in 2022, junior companies continue to make up a greater percentage of total exploration budgets than they have over the past decade. At Euroz Hartleys, we continue to be the beneficiaries, as Jaxon mentioned, of strong relationships with many of the companies that are presenting over the next 3 days. Given our geographical location, we offer investors insights and access to management teams in the resources landscape who continue to shape tomorrow. I hope everyone has a great conference. I look forward to catching up with everyone over the next couple of days. I'll now hand over to Michael to run you through.
Good morning, ladies and gentlemen. I'm going to kick off with a few topics I was strongly advised not to talk about. Politics, oil and gas, and coal. Let's see how we go. As Tim Bunney mentioned, Euroz Hartleys is a WA-based business, and being in the West can sometimes feel like we're in our own little world over there, disconnected from the rest of Australia. We do our own thing in the West. We run state budget surpluses, unlike the rest of Australia. It's got nothing to do with the $5 billion in GST top-up payments or the $10 billion in iron ore royalties we receive every year, but down to the strong fiscal management of WA state government. And just like WA, the resources industry can feel a bit isolated at times. So in this presentation, we'll be zooming out and looking at the larger macro trends that we think are facing the resource industry over the medium to longer term, and why we see so much upside in the resource industry. And almost every day you hear the words decarbonisation, electrification, net zero by 2050. What does this actually mean? What does this actually look like? I think this chart just really highlights what it actually looks like and what kind of challenge and opportunities that actually outlines for the resource sector. So what we're seeing here is what the net zero challenge actually looks like. I think it's the largest opportunity the resource sector has ever faced. We were trying to replace 80% of the global energy supply that is currently being supplied by coal, oil, and gas with renewable energy. And hopefully by the end of this presentation, I will have convinced you that without a substantial increase in mining investment, there will be no energy transition. And we'll touch on the metals required for wind farms, solar panels, battery storage, and grid expansions. I'll give you the hint, it doesn't grow on trees. And this chart again just drives home the point that whilst renewables have been increasing, there's still, with the red line at the bottom of the chart there, there's still an incredible amount of work to do if we're ever to achieve our net zero targets. So it's easy to get carried away with large numbers when you get into the hundreds of billions of dollars. But I think it's just important to look at what the kind of global spend is required just to maintain the oil and gas sector alone. The oil and gas sector spends in the order of $500 billion US, and just in the upstream sector, maintaining the oil and gas supply. Those that argue for an immediate stop to oil and gas investment just need to ask the Victorians in the crowd how that goes for gas prices. It is my argument that we need an increase in both oil and gas investment whilst rapidly building out a renewable sector sooner rather than later to ensure an energy crisis does not occur in the transition period. And I think one thing that we need to focus on and consider when you talk about replacing energy sources is the energy return on investment. There's a lot of research out there with conflicting results, I'll admit, that say renewables are currently on par with oil and gas in terms of energy return on investment, which would imply that a similar investment is required to that of oil and gas into renewables in order to displace that energy supply. However, this doesn't consider the build-out phase which we are currently entering for renewables, which would be the most metals intensive phase. We believe that will require spending rates to be in the order of oil and gas capex. So we're talking hundreds of billions of dollars needs to go into the resource sector to build this out to achieve our net zero target. So the next logical question is to ask, well, what are we spending in the resource sector? And is this sufficient? The short answer is no. You just need to take a second to remember again that the oil and gas is spending $500 billion US compared to mining capex, which are only 100 billion. And it's also worth noting the trend here with sustaining capex making up more and more of the total overall capex. And that's largely to do with sustaining project major miners moving towards cash harvest mode, still nervous around the overcapacity that was built out during the 2015s or the China boom leading into the 2015 to 2018 sector lows. So further evidence of this is the reluctance of the large majors to spend on capex, and that's seen with the recent M&A activity with majors acquiring existing producers rather than going for growth capex. So this chart just breaking down by commodity, so that you can see the China-driven boom, which I just touched on there. And it is important to note that even if you ignore everything I say about the energy transition and you're a climate skeptic and you believe thermal coal is the solution to all our energy requirements, you can still be a resource sector bull. Basically, what we're seeing here is basically the mining investment cycle with the capex underspend since 2015 that you can see there. It is underpinned by traditional growth from emerging markets that were being India and Southeast Asia. There's still energy, so there's still mining requirements, and capex needs to be spent just to support that market alone. The energy transition cycle is literally just the cream on top of this chart, which this chart doesn't take into account in those forecast years. And again, we're going to spend hundreds of billions of dollars, and you can see that capex is actually declining at the same time the demand for renewable metals going forward is about to go through the roof. We're talking about those metal requirements, and this is just kind of just driving that home. So you can see there that the electric vehicles are a large driver of this metal demand in those forecasts, along with the build out of electricity grids. So what we're really trying to drive home is that the renewables is basically an incredibly metal intensive process, and we need a large amount of investment into the resource sector. Without these metals on the chart here, there will be no renewables, and without renewables, there will be no net zero by 2050. Hopefully this chart goes some way to showing this. So given the electric vehicles are the largest driver of metals for net zero, it just breaks it down further, comparing the metal demand to the conventional internal combustion vehicle. Obviously, this mix can change with different cathode chemistries, but you get the idea. The EVs are metals intensive. So now that we've established that the mining capex needs to dramatically increase, we're just turning our attention to the exploration side of things. So we can see that exploration spend has been increasing in recent years, in line with commodity prices, sentiment, although exploration is forecast to fall in 2023 based on current budgets and capital raised in the last 12 months. However, we're confident that exploration needs to increase, and that is largely just to backfill and grow out the pipeline of resource projects, which is becoming depleted and more marginal as well. So just using copper as an example, because it just has the most data out there in the market, it's the easiest one. So we can see that despite the large increase in the copper exploration budget, the number of new resources discovered globally has been steadily declining over the last decade or decades. And the most accessible and easiest discoveries have already been made, the outcropping discoveries. We don't see any change for this trend as well. And this doesn't only just apply to copper, but all commodities as well, as discoveries become deeper and more remote and in more challenging jurisdictions as well. And another explanation for this is around the shift in exploration budgets as they move towards near mine and late stage exploration programs. Declining greenfield exploration has been a trend over the last 20 years. As previously accounted only 20 years ago, it was 50% of exploration budgets. Greenfield exploration is now down to just 16% of budgets, which goes a long way to explaining the lack of new discoveries. We believe that the solution for lack of exploration, and especially greenfield exploration, is higher commodity prices to drive risk capital into the greenfield exploration. There's almost a chicken and egg scenario there as well, though. So another key driver of commodity prices, we believe, will be geological inflation. And a classic example of this is just looking at the declining average copper grade over the last 120 years, and it's now just sitting above 0.5% copper. Other drivers of geological inflation include higher strip ratios for your open pits and increased haulage rates for underground mines as they go deeper, let alone the greenhouse gas emissions from doing so with both of those activities. As lower grade and more marginal projects come online, it also builds out the right-hand side of the cost curve, supporting higher commodity prices well into the future. And just tying it back to many companies in the audience, it's important to look at who is doing the exploration spending. Junior share of exploration has hit a 10-year high of close to 45%. And we're not surprised by this statistic, as the nimble nature of junior companies, the cost effectiveness of juniors doing exploration over some of the majors can be, orders of magnitude cheaper, which wouldn't come to the surprise of many in the audience today. We believe that the junior sector needs to continue to increase exploration to continue to backfill and grow out that resource projects, as we've shown that the metal demand is truly amazing over the coming years. We're confident that the junior sector share of exploration budget will remain strong over the coming decade or decades, provided the capital markets remain open. So just in summary, the market right now, there's no denying that the short-term risks, anything from the junior banking or regional banks in the US, you've got sticky inflation concerns, you've got rising interest rates, global recession risks, you've got geopolitical uncertainty. But I think there's always short-term noise in the market. Tell me a time when there wasn't short-term concerns, even during the midst of a massive bull markets in the past. So there always has been, and there always will be short-term risks. However, the longer-term fundamentals of underinvestment underpin our bullish outlook, and that was just touched on with the emerging markets being Southeast Asia and India going forward. We believe that the energy transition metal requirement is purely the cherry on top of this metal demand going forward. We believe that there needs to be a significant investment in exploration to backfill out the growth pipeline of projects, which has become depleted over time. And the incentive prices are required to drive this risk capital back into the resource sector, especially greenfield exploration. Most importantly, there will be no net zero by 2050 without a substantial increase in mining investment. And then the one last takeaway is that the capital markets are always open at Euroz Hartleys for quality projects with managements we can back. Thank you for listening.
I was very impressed, Michael. You gave me 5 minutes. This could be worrying for everyone. That was great. I was very impressed that a senior marketing analyst not only has insightful information to share with us today, but he's also got a bloody good sense of humour. Congratulations to you. It's a great way to set up the conference. And I just want to point out too that Euroz, you've put together a poll with White Noise, and over the next 3 days, what we'll be doing, just before we go to each of the breaks, we'll be putting up an interactive question behind me. I'll show you the QR code. I'll talk you through it as the day goes past, but they want to do a little bit more research, and you are going to be their focus group over the next 3 days, just seeing where you think the market's going, what commodities you think are going to be the stars, etc. Over the next 3 days. So that will be a little bit of fun as well. All right, while we're ahead, let's keep it up that way, shall we? It's really nice to see so many familiar faces in the audience today as well, too. So great to see so many regulars back. Have we got any new faces amongst the audience? People who've only just found RIU and come on board? Well, we have. Welcome. Great to have you here, and really good to hear your feedback as well over the next couple of days. So we're acting on the feedback that you gave us last year as well. So you notice that we are all in this room over the next 3 days. It means that we'll have a couple of our presentations, or a large percentage of our presentations will be in the 15-minute mark. We're also doing a little bit of speed dating with the potential companies for you to get involved in and invest with. So we'll be doing some little 10-minute sessions as well. I'll let you know about that as we go. So I suppose really too, one of the things that I wanted to point out to you all while I do have the time is that over the next 3 days, we're giving you the opportunity to hear from the companies as they come up here and they present. But that, of course, is only part of the equation of RIU in 2023. The real magic, as one of my colleagues pointed out last night at dinner, is the opportunity for you to go and speak one-on-one to people and to see, I suppose, not just what they have up here on stage, to hear their progress and their plans, etc., for 2023 and beyond, but to see if you believe in the people, in the teams that are behind these companies, to go up and make those real connections. Now, for those of you who are playing along at home or in your offices, wherever you are, welcome to you. One of the things that our presenters do want to let you know is that you do have access to them as well. Maybe not right here, but you do have their phone number. So please pick up the phone and make sure you make those contacts with them too. All right, our first presentation is from one of the companies that is highlighting one of the commodities that Michael pointed out, and that, of course, is lithium. Now, this fellow up here today is not going to be in Australia for much longer. He's not actually heading over to Africa, where the project is that he's about to speak to us. He's heading over to China to talk to his joint venture partner. Is that correct, sir? You've got the passport ready?
Correct.
All right. So would you please welcome Simon Hay, everyone, from Leo Lithium to start our round of presentations for 2023. Welcome.
Great. Thanks, Chrissy. Thanks, Euroz. Great to be first company presenting today, and I'll give you an overview of the Goulamina Lithium project in Mali, and I'll also touch on our joint venture partner, Ganfeng. That's our disclaimer, forward-looking statements, pretty typical. Quick snapshot of Leo Lithium and Goulamina. So Goulamina is a large-scale resource. It's top 7 lithium hard rock deposit globally. Excellent financial metrics, noting that these metrics were calculated at a price that's currently about a quarter of the current spot price. And we're well funded. We have a great JV partner in Ganfeng, and the project's half constructed, and we're halfway through the schedule. So where are we? We're in West Africa. You can see on this chart here that we are in this region of Mali. Mali's in West Africa. We're close to the border with Guinea and Cote d'Ivoire, and you can see all the huge number of gold mines that are in Mali. Has a long experience of mining in Mali, 20 years plus of significant gold assets in the country, and that's a real advantage for us in recruiting experienced workforces. Our JV partner Ganfeng owns half the asset, 50% at asset level, no shares at the corporate level. And our capital cost for the project is around $285 million US construction costs and 33 of working capital. Said it's a large-scale resource. The bubble chart shows you that very clearly. This is Goulamina here. We've got the 2 arrows on it because we've grown the resource from 108 million tonnes late last year to 142 million tonnes January this year, and we're still drilling. So that's why we expect another progression pretty shortly. We'll be upgrading the resource again next month. And some of these other bubbles on the chart are pretty illuminating. The one right here is one you've probably heard of, Liontown. Liontown is on a very similar scale and schedule to us. First production mid next year, around about 150 million, 160 million tonne resource, which is where we'll be shortly. Just one little difference, their market cap is 6.2 billion, ours is 700 million. So even if you discount the 50% asset ownership, you can really see on a resource level, Leo Lithium is very undervalued. Some of the other ones here, sorry, just going back. Some of the other ones here, that's Covalent, which is Wesfarmers SQM joint venture. Our resource, 142 million tonnes. Our reserve of 52 million tonnes, we haven't upgraded that in a number of years. So with this current resource drilling that we've got underway now, we will be upgrading the reserve around August, and we'll look forward to a major increase. At the moment, we have a 22-year mine life. We expect that to grow significantly. And our first stage of production is 500,000 tonnes per annum of spodumene. We have a plan to move into a stage 2 with a 330,000 tonne capacity increase, 1 to 2 years after stage 1 is constructed. That stage 2 capacity is likely to grow. With the resource growing, a mine life approaching 30 or 40 years, it doesn't make a lot of sense. So we're likely to grow that to 1 million tonne per annum. That's part of the discussions in the next few weeks with our JV partner Ganfeng on growing that stage 2. Some of the drilling underway, we're getting spectacular hits. This cross-section is a real typical example of what we're seeing across the deposit. We have, you can see the pit shell in outline here, and you can see some of the recent drilling. We've gone under the pit shell, under the RPEE pit shell, and we've got 70 metres at 1.6% lithia below the pit shell. The deposit remains open along strike. We're now pushing out to the west, and we're again encountering new pegmatites. It's open to the north and open at depth. So it's a great deposit, and the geos are the most happy people in the company at the moment. Not every single drill hole, but at least once a week, I'm getting an excited geo ring me up saying, "Hey, we've hit another pegmatite." With a very large resource, we need a fair bit of land. So we've recently acquired, or in the process of acquiring, 2 tenements, which will triple our land holding. The real objective of this is to site infrastructure. So we'll need extra land for mining byproducts, probably for solar farms, agricultural areas as well to feed the workforce, and other infrastructure. But it's also prospective. Walking across the ground, we have encountered pegmatite boulders, so we will be sterilised drilling around the deposit to begin with, as we push into the east of the Leo tenement, and then we'll be exploring with our new partners. So some more land to explore, keep the geos happy again. So we're halfway through our project schedule. It's a 27-month construction schedule, which kicked off February 2022. First production is late Q2 next year, so almost a year from now. And now that we're halfway through the schedule, we did a midterm project update. So we're also 90% committed on the capital. So we've restated the capital and confirmed the schedule. On the capital side of things, we found that the project was going quite well. Our construction capex was growing really only from $255 million US to $260. We still have $8 million of contingency available within that original budget, but we thought with another year to go on the construction schedule, that contingency of only $8 million was a bit light on. So we've boosted the contingency by $25 million to take the construction capex to $85 million in total. We've just recently recruited a COO, and he's building out his operational team. In him understanding the project, we've found that we were understated on the working capital to get us through to first production. We have encountered some inflation in the pre-strip, so explosives and diesel costs are well up, and that has contributed to an increase in the working capital of 33 million. So overall, the number we're now quoting for our total capex to bring us into production is 318 million US. And sorry, just to point out, that gives us a capital intensity of $563 per tonne of SC6, compared to some of our Australian counterparts who are dealing with different inflationary pressures. We're roughly about a third of what it would cost to build a similar sized project here in Australia. So even though we have some disadvantages being in Africa, it certainly has some advantages on the capital cost side of things. We're pretty close to our first revenue opportunity as well, which is DSO. So we have confirmed that we have around 185,000 tonnes per annum of ore surplus to the first spodumene requirements when we commission the plant. So we're intending to sell this ore in the fourth quarter of this year and the first quarter of next year, roughly 90,000 tonnes in each quarter. To bring this into eventuality, we are currently recruiting all our contractors. We have the tenders out on most of the main contracts: mining, explosives, crushing, logistics, and we're very close to awarding some of those contracts. First mining will start next month. Likely that we will sell the DSO to our JV partner Ganfeng, but not written in stone as yet. Again, part of the discussions later this month will be on pricing and terms in regard to DSO. DSO is not covered in our offtake with Ganfeng. Our mining contractor has, we've issued them an early mobilisation contract, just a moderate contract just to bring them onto site, and the fleet has mobilised and they're starting to bring their teams in as well. So we'll see first mining underway next month. On the funding side of things, we are very well funded. Ganfeng has provided equity and debt to get the project underway. The moderate capital cost increase that we've seen, we expect that to be covered by the increase in the DSO volumes that we have. So that revenue that's coming in late this year, early next year, will cover the working capital increase that we've seen. From then on, both JV partners need to bring further funding into the JV, and Leo has its funding currently in its corporate cash account. The project is on schedule, as we've said. So this is fantastic. A lot of projects globally, not just in lithium, but in the industry, suffering through supply chain pressures and shortages of labour and access to fabrication shops. So far, we have managed to keep the project on schedule, which is fantastic. We're still at the early stages of construction. I'll show you some photos shortly. And we're coming into the wet season. So we're trying to prepare the site now so that we can get through this difficult period and remain on schedule. Right at the moment, we've got earthworks and civils underway. Over the next 6 months, we'll start to see a lot of equipment arrive on site, erection of buildings, installation of machinery, and then towards late this year, early next year, we'll be starting on the commissioning side of things. Our major long lead items have all been ordered and most of the fabrication has been completed. So the ball mill, crushing plant, magnetic separators, etc. They're currently on ships on the way to Mali. And now the next level of equipment is being fabricated at the workshops around the globe. We're bringing in equipment from South Africa, Southeast Asia, and Europe. Site works, just a few photos showing what's happening. Earthworks and civils underway. You can see construction advancing pretty solidly on plan. We've built our construction camp and we're about to start the permanent camp. So tracking really well. Halfway in, to be on schedule is a great achievement. Also spent a lot of time on logistics recently. We're 1,000 kilometres from port, and there's not a great deal of mineral commodities that are exported from Mali. So we have to create, in some ways, create our own logistics networks. We're looking at exporting through 2 ports at least, and maybe 3. And last year we secured our first port, Abidjan in the Ivory Coast, and we're looking now at San Pedro in also in the Ivory Coast. We're close to appointing a trucking contractor, and we'll be trucking both DSO to 2 ports, and we'll be trialling the trucking contractor so that we can appoint one for the spodumene construction production phase. Also, recently we've driven the roads from the mine site to the ports, and I've got a couple of photos here just showing you the quality of the roads. The roads were a lot better than we anticipated. Pretty similar to an A country road in Australia. Bitumen, 2 lanes, good verges. I've driven some of these roads myself. You can easily average 100 k's an hour. Got to slow down, of course, through the villages, but the road's far better than what we thought. So we think logistics is certainly achievable, and we'll be proving that up through the DSO. Just on Mali, military government in place. There is a return to democracy over the next 12 months. And just on the weekend, they confirmed the constitutional referendum, which is the first election that will be occurring next month. So it's great that they're back on the democracy trail. Still a long way to go. Just to finalise, Leo Lithium Goulamina project, it's a tier 1 resource. We've got early revenue opportunity with DSO only a few months away, project on schedule, and only a very moderate capital cost increase, and very undervalued compared to many of our peers. Thank you very much.
Thank you so much. Brilliant presentation. I should mention too to our other presenters in the room our rules of engagement. So I will ring the bell with 2 minutes to go, and then I will stand at 1 minute. And then James at the back will cut off the microphone as we get to the 0 seconds. So we're very brutal up here to keep time. We have to be. We're going to stay in Africa now, but we're going to change commodities. I'd like to introduce you all to the Corporate Development Manager for Predictive Discovery. This is Brad Milne. He's a great human. He joined the company only recently, back in October 2022. He's got 15 years of experience in this realm, though, underneath his belt. Today, he's going to be sharing the latest updates on Predictive Discovery's flagship Bankan Gold Project. Now, that is one of the largest gold discoveries in West Africa in the last decade. So looking forward to hearing this story. Will you please make him welcome?
Thank you very much for the introduction, Chrissy. It's great to be here to talk about predictive discovery today, which we think is one of the most exciting gold exploration and development opportunities on the ASX right now. It's also great to be kicking off the conference with 2 fantastic African projects. Here's our typical disclaimer, forward-looking statements, etc. Predictive is focused on the Bankan Gold Project, which is located in Guinea, West Africa. It's got all the hallmarks of becoming a future tier 1 gold operation. We've discovered 4.2 million ounces so far at our NEB and BC deposits, and we're progressing through a dual strategy of moving these deposits towards the development phase, but also continuing to explore to unlock the full exploration potential of the Bankan permits. On the development side, we're continuing to infill the resource. We're completing a scoping study by the end of 2023. And all this is putting us on a pathway to secure a mining permit in the first half of 2024. From an exploration perspective, the permits are highly prospective for additional discoveries, and we're looking forward to currently increasing our efforts in this regard, both on near resource exploration, but also regionally. So this is a very exciting part of the story. And we'll touch on this a little bit later on. Importantly, we've got a high quality team in place at Predictive Discovery. It's led by our Managing Director, Andrew Pardey, and the team's got a great track record of building out resource bases and developing and operating mines in Africa, and that goes for Guinea as well. So we'll have a look at the team in a little bit more detail. As mentioned, Andrew's our Managing Director. He's an Australian geologist. He's now based in Jersey, UK, hence why I'm up here today. And he's spent the last 20 years working on gold projects in Africa. He spent 10 years working in country in Guinea, where he was held senior management positions in the 2 major gold mines that operate in that country. So from that process, he gained excellent experience operating in country and also some fantastic connections. After Guinea, he moved on to work at Centamin, which is a London-listed gold producer. He was instrumental in their development and operations of the 450,000 ounce per annum Sukari mine in Egypt. He started out as GM there before transitioning to COO and then CEO of Centamin itself. So as you can see, he's got a great track record of both in-country experience and also running a major gold producer. The board is rounded out by Simon Jaxon. He's a bit of a West Africa expert. He unfortunately can't be here today. He would have loved to be, but unfortunately came down with COVID on Sunday afternoon just before boarding the flight. So he's quite upset about that. For those of you who would know him, you'd understand that. The board's then rounded out with Sandra Bates. She's a UK-based lawyer with ESG credentials, and Stephen Michael, a resources executive based in Perth. Andrew's put together a high-quality management team, with the exception of myself, based in Perth. They're all based in Guinea, so showing a very strong connection towards working in the country, which is important from a government perspective. And they've got excellent experience across Africa in the key disciplines of resource development, geology, study management, operations, ESG, and of course, corporate and finance as well. Looking quickly at our capital structure, we've got a $300 million market cap, approximately $20 million cash in the bank at the end of March. So we're well funded to continue progressing our activities. We're well covered from a research perspective. We've got 4 brokers covering us at the moment. We've got an excellent share register for a company of our size and our stage of development. We've got BlackRock at about 12%. And we've got various other North American resource and gold focused funds at the 3 to 5% level. So that's a fantastic endorsement for the quality of the project, but also the team. We're based in Guinea. Guinea's a stable and mature mining jurisdiction. It's got a long running gold industry with 2 major operations that have been going for 25 and 15 years respectively. It's also one of the world's largest producers and exporters of bauxite. And it's got the major iron ore deposits of Simandou and Nimba, which are now starting to head in the right direction. So yeah, very well established mining industry. And what that means is mining's well understood in country, it's well understood by the government, and it's an important contributor to both the economy and also to jobs in country and in the regions. Quite stable from a political perspective at the moment, and also it's a very low security risk. So overall, a good jurisdiction to be based in. The gold industry in Guinea is not that one. Is based in the Siguiri Basin, which is part of the prolific West African greenstone belt, and you can see there's many mines and development projects that are located in West Africa. The Siguiri Basin is one of the least explored regions in West Africa, but the basin margins are highly prospective for major gold discoveries, and it's no surprise that we see Bankan sitting right here on that basin margin. As mentioned, 2 major gold operations. We've got some good operators there in Anglo Gold, Ashanti, and Nor Gold. We've got a range of development projects at various stages of coming through the pipeline, and also a renewed interest in exploration activity, probably due to the success that Predictive Discovery's had. The Bankan project comprises of 4 exploration permits. It covers 356 square kilometres, and we've got 35 kilometres of that very important basin margin running through the permits, which you can see here by this pink line here. So certainly located in the right area. We are continuing to do a lot of drilling to grow and upgrade our existing 4.2 million ounce resource. We're working on a scoping study that's due for completion towards the end of this year. And that's likely to envisage both an open pit and an underground operation, simple CIL processing, with the potential for around 200 to 250,000 ounces per annum. So it's a good scale project, and this combined with the exploration upside gives us the confidence to say that this has got the potential to become West Africa's next tier 1 gold mine. ESG, we've got a strong ESG focus. This is important for us. We're located in the Upper Niger National Park, where part of our permits are overlapping Buffer Zone 2. The core conservation area, which is shown here in green, is the key area of the conservation efforts. And then surrounding that, we've got 2 buffer zones. And as mentioned, the NEB and BC deposits are located in buffer zone 2. There's various different activities that can happen in buffer zone 2, ranging from agriculture to other mixed uses like charcoal production and logging and those sorts of things. So as you can imagine, the land around the deposits is fairly degraded. And we're 18 to 21 kilometres away from that core zone. Mining is not permitted in buffer zone 2. However, there is a defined process to secure a mining permit in Guinea in these types of areas, and there's precedent for this happening in country in the iron ore and the bauxite industries. We've got a lot of support from the local government, the central government, and also the local communities. So we're confident that we're on a pathway to being able to secure the mining permit in the first half of 2024. This slide here just shows some of the differing landscapes within the different parts of the national park. So this image here on the right, you can see is around the NEB deposits, and that's reasonably degraded landscape, and that compares to some good quality wooded savanna that we've got in the core zone of the national park. Moving on to the deposits and starting with NEB first. Look, it's really a fantastic deposit. It's got enormous scale. There's fantastic consistency in the mineralisation. We've got 3.5 million ounces in an open pit resource at this stage, and 300,000 ounces in an underground resource, which is based on limited drilling so far and running at a high grade of 4.75 grams per tonne. The focus over the last 6 to 12 months has been on infill drilling, and that's really geared around putting us on the pathway to complete the scoping study by the end of this year, which is a critical part of our permitting strategy for the project. So we successfully have brought 50% of our open pit resource into the indicated category in an update that we did in February this year. And you can see that that's represented by this red shape here in the top 250 metres of the open pit shell. We're continuing to infill the resource, focusing on the bottom part of the pit shell here. And we're looking at doing another resource update in the third quarter this year, which will hopefully bring the majority of that open pit resource into the indicated category. And that will be the resource that we use for the scoping study going forward. There's upside at NEB. We've got this initial underground resource here, which is based on limited drilling. So there's further drilling to do there to broaden that resource out, but also start to fill in this gap that you see between the base of the pit and the start of the underground resource. We've also got some potential around this small northern pit here, which is open along strike and at depth. So some good potential to grow this resource over time, but the current focus on infill and upgrading the resource. Bankan Creek is a smaller deposit located 3 kilometres to the west. It hasn't been a huge focus for us recently, given the critical mass that's sitting at NEB. However, we've recently completed a re-logging and reinterpretation campaign, and that's given us a lot of good information to start planning the next drilling programs. As mentioned, good simple metallurgy. Some test work that we've done last year showed that we're getting recoveries of around 92, 94, etc. percent, based on pretty standard CIL processing techniques. So that's good. And we've got 54% up to of the gold coming out in the gravity circuit. So good metallurgical characteristics for the ore. As mentioned, the Bankan permits have got fantastic exploration upside, and this is a really exciting part of the story. Just looking from a near resource perspective, initially, we've got many high quality targets that we've defined within close proximity to the NEB resource. And just to have a look at some of the hits that we've got on this page, and I've done it again. We've got the likes of 20 metres at 18 grams per tonne, 18 metres at 15 grams per tonne down here, 10 metres at 10 grams per tonne over here. 800 west, we've got 6 metres at 19 grams per tonne and 4 metres at 6 grams per tonne up at NEB North. So look, I mean, these are some fantastic drill results that all need to be followed up on. And you know, they could be considered company makers in their own rights for junior resource companies. So we're really excited to start doing a bit more work here. We've got an RC rig that's just started doing some work up at 800 west and NEB North. And that will also be doing some drilling around this smaller resource pit shell at NEB, which we mentioned had some upside potential. So look, that's really encouraging. We've also got our regional permits, which are highly prospective for major gold discoveries. We've got, as mentioned before, we've got the basin margin that's running through this part of the permits here. And we've defined many high quality targets that sit alongside that basin margin. Our efforts at the moment are focused on the Argo prospects, which are about 15 to 20 kilometers north of NEB. The work that we're doing at Argo, we've recently completed an IP geophysics program. We did a trial of this at NEB and it worked really well. So the geophysicists are currently just working through the collation of data and also the processing of that to come up with refining of some exploration targets. And if that comes up as we expect, we'll be sending an RC rig up there to start testing those targets. So really looking forward to some news flow coming up on both the near resource and the regional exploration in coming months. So just to recap on NEB, on Predictive Discovery, sorry, we've got what we think is a tier 1 gold project at Bankan, 4.2 million ounces defined to date. We're moving into the development phase with social studies, environmental studies, and a scoping study underway. And we've got excellent upside potential across the permit package to find more gold. Importantly, we've got a high quality team that's very well placed to be able to take this project and this company forward into the next phase. Thank you very much for your attention today, and please drop past the booth and have a bit more of a chat about Predictive Discovery.
Hey, Brad Milne, can I shake your hand? Come back here. Can you give him an extra big round of applause? Because with all the experience he's had over the last 15 years, this is actually his very first performance up on stage doing an address like this. Would you make him? It's a brilliant presentation. Well done to you, buddy. Well done. Right, our next company, they are edging closer to manufacturing battery anodes in Europe, which is pretty exciting news. They had some really exciting news recently regarding their Swedish graphite operations. Lots of coverage. You would have seen it in resources and investing rags, I'm sure. To give us here at RIU some insights into Talga Group's progress, would you please make welcome their MD, Mr. Mark Thompson.
Thank you. Thanks, Chrissy. Thanks, Chrissy, and thank RIU, and thank you, Euroz Hartleys, as well for their sponsorship here today, particularly Michael, who opened this morning with some great data, which I had to notice when it came to the net zero graph on the different minerals needed for the electric transition. I'm not sure if many of you that were in the room at the time, but the color that was the largest volume of mineral needed for that transition was actually graphite. It wasn't copper, it wasn't any of the other ones, it wasn't lithium. And that's because there's a huge amount of graphite in batteries, and that's why I founded and conceived and invented processes for converting graphite into battery materials and things around that electric transition. That's what Talga does. It's not purely a resource story, it's more of a technology company that owns its own sources of production. So let me introduce the unintroducible in 15 minutes, but we do have a booth here and I'll be here all day for anyone to come and bug me about all the things that have haunted you about graphite over the last 12 years, which has been a very checkered sector, but there's a workshop in that. But Talga's distinguished by being vertically integrated. So we not only mine graphite, we have our own processing techniques, and we actually make the fully coated anode. So we interact directly with car makers and battery cell makers. So it'd be the equivalent of if a hard rock lithium miner was making an electrolyte or a cathode product. Very challenging, but very profitable. You get to keep all the margins, and you have potential great pricing and strategic power going forward. I searched the world for a special resource, which we found in Sweden, in North Sweden. And the good thing about that is that it's a very stable jurisdiction. It's also a roads drive away, no shipping required to our customers in the automotive and battery space. And also we have hydropower to run them. Quick corporate overview, really just to show off that I've got some skin in the game. I'm still the second largest shareholder, which after 13 years, they tell me is pretty good, but a range of good Australian and UK investors, and particularly a lot of long-term investors that are coming up to us here in Sydney. Market cap's about 550 million at the moment. And you can see during this relatively tough macro time, we continue to grow as we continue delivering on various milestones. While we are ASX listed, most of our operations are in Europe. We have about 60 staff. We also have an office in Japan and also Hong Kong. but we have operations which I'll run over briefly in Europe. And essentially what drives us, and certainly a lot of our employees, is the ability essentially to not just pay homage to sustainability, but to actually do it by reimagining the supply chain, by just going through it very carefully. And we actually equate essentially profit to this, not in some abstract philosophical way, but actually if you just look at the efficiency of moving material from one place to another, you look at the energy, you look at the costs, you look at the way the world is developing, that we do all that. And if you do that efficiently, you end up being very sustainable as well. Graphite is the anode, so that's the other side of the, from the cathode you'll hear about, but on the anode, so 50% of the active materials of the battery are actually graphite on the anode side. And it doesn't matter what chemistry you use, LFP, NMC, they're all pretty much the same. Different technologies come along from time to time. We can talk about those later, but predominantly 99% of all volume of batteries being made, lithium ion batteries and around the world, and the gigafactories under construction are graphite based. On the right, therefore, you get this hockey stick, which you've seen for years to do with EVs. Fortunately now, this is actually getting retroactive. You can actually plot where things are at compared to this today, because we're about sort of halfway along there. And in fact, sales are exceeding what the forecasts were. Frankly, most people I know in the battery business are terrified of what's going on. They're all stressed about how they can sort of meet what's going on. And regardless of the macro and the investment and the equity markets, from a pure supply point of view, there's a huge amount of stress to build what is just the demand from essentially people buying electric cars, regardless of the strategic side of governments, legislations to change the uptake of these things. So what Talga proposed was essentially taking what was an extremely warped supply chain spread across China, Korea, Japan, and different parts of the world. And it's split up into many different factors. The miner doesn't know how to purify. The purifier doesn't know how to coat. So we've put all that together in Talga as one single company, all operating in North Sweden where this hydropower is. And as I said, we go all the way to the end, selling battery material. We've built the first and are now operating the first coated graphite anode plant in Europe. This is what's called the electric vehicle anode plant. That's because unlike a lot of the metals like lithium and copper and so forth, you cannot sell graphite as a coated battery-ready product as a spec product. They have to test it first, and they have to test it over several years of what's called qualification. The qualification for automotive is extremely difficult. It's nearly aerospace quality processes, and it takes a long time. You have to show that you can do it. You can't just propose you're going to do it, raise money, and then go do it. No one's actually going to enter into contracts with you. So you need ISO certified, excellent operating practices. We have our own battery laboratories as well as powder laboratories. So we test the quality of our materials. It's really not to do with the graphite. It's to do with making anode. There's a big difference. Graphite can be used for all sorts of industrial uses, thousands of uses. But what we are interested in is electrification. And so our customers and our company is set up to sell the final product to them in the form of anodes and different battery materials. And so that's what we do. We have our own battery labs both here and in Cambridge at our Battery Centre of Excellence, which is a very European term, but it sort of encompasses what we do there. We have about 60 staff and growing fast actually in Europe, and a lot of them are material scientists, usually with 3 or 4 degrees that I don't know how to pronounce. And here in Cambridge, which is a very diverse hub of technology, they interact with the world's best scientists, and we have fantastic materials. So that's where we develop the new materials. So materials for solid state, materials for silicon anodes, materials for sodium ion batteries. So this is where we develop them and then we transfer them over. Why is it in Cambridge? Well, the UK government likes funding them, but also if you've got really quality scientists, they don't want to live at a mine. They go live somewhere like Cambridge. And so this is essentially a horrible looking chart of the layout of the company, which is simply that we mine, but we can also take in recycled materials. We run them through our own process technology. We have quite a significant IP library. We make graphene, which is called talphene and talphite, and we turn those into different sorts of battery products. What doesn't turn into a battery product, we use as a high quality additive to add electrification into different materials or increase their sustainability. Our main product is Telnode C. It's a really high performance product. It's not like a bulk natural sort of graphite from China. It's actually very, very high performance, particularly at fast charge. This is what it looks like. So if you're wondering what the heck we sell, we actually just sell this black powder, but it's a finely engineered black powder, less than 10 microns in size, super fast charging, and highly engineered particle. This all runs on hydropower, and because of that and our short access to customers, it's probably the most sustainable anode material that you can deliver to a customer, particularly in Europe, potentially over into America, I guess. But Hitachi and ABB have done a life cycle analysis showing it's about the cleanest anode in the world. And we also make silicon. This is a pretty hot topic lately. It's not just technical. There's already some silicon in high performance batteries and in some of the 3C batteries. You guys, your phones, your laptops, if you don't realize already, they're all running on about half of your battery in your device is graphite. And in that graphite, if you trickle a little bit of silicon in, not too much because it likes to swell and crack and break, but if you sprinkle a little bit in, you get more energy, which means you can have a longer life. We make materials like that. It's currently in a pilot phase and it's looking good for going to commercialization soon. We'll talk about that when we've got the key customers we want to go public with, but we make that. That's our facility in Germany that makes that. The main mining project, which has been the focus lately, as Chrissy mentioned too, very exciting. Recently, we got the first in over a decade mining permit, mining environmental permit, and Natura 2000 permit. We're proposing a very, very small mining operation that just operates half a year at 100,000 tonnes per annum. And that uses about 5% of our resource base to feed a refinery, which is the building in the bottom. And the refinery does the purification, shaping and coating and produces about 20,000 tonnes of anode. What's that worth? Well, in the DFS, it was doing about 180 million a year in gross revenue. And we've got plans to expand that by 5 times. Sorry, I'm going so fast, but it's a lot here. I won't show the video. Well, I'll show the video. It's only a second. Anyway, that's the mine site, which we just got permitted. It sits in a natural bowl. It's up near Kiruna, which is the iron ore mining area and copper mining area of North Sweden. And this is from the recent environmental hearings we had to have to permit the project. There's a natural glacial sort of sand dune. This area was covered under a mile of ice only 10 to 15,000 years ago. The land is actually currently rising up. It's rebounding from the weight of that ice. So the sea is actually going out rather than up. And here we are. It's about 300 k's inland. And here's a nice Arctic winter, Arctic night for you. Certainly not this time of year. It's bright. It's brighter than this at 1 o'clock in the morning up there. So that's up at the mine site. Down at the refinery site, we're actually in Luleå. Luleå is where the electric vehicle anode plant is. And you can see on the right, the industrial park, it's being permitted by the government. We're currently permitting the refinery as well for the operation. All this dark stuff you see is coal and steel. There's a steel plant there, so there's a coking plant and things like that. So it's a heavy industrial area that's being permitted. And this is what we're building. The EVA plant I showed you earlier, the little bits of mechanical kit and our ovens and so forth, represents about 1/3 of one of these lines. So we're just expanding that. With anodes, so the mining part can scale up, you get all sorts of savings as you get bigger, but on anode making, the machinery is a lot smaller. And so you just add lines. It's very modular. So if you want to expand production, you just add more and more lines. You don't make them bigger. So that's what we're building there. There's a purification plant behind there, and these are the coating lines. So this site is now cleared and services going in. We're hoping to start construction on this later this year, start the foundations and pouring concrete on this later in the second half of this year. We're in the middle of a bunch of demand from a bunch of customers, probably 90% of or more of the companies you see on this page, we have some sort of commercial relations with. They're all testing our materials. We're all in negotiations on various things. So only some of them we've been able to announce publicly. ACC, who's the battery maker for Stellantis, which owns a lot of car brands around the world, and also Mercedes, have entered into a contract that's heading towards binding. It's been under negotiation for a while. I can't say much about it, but there's good reasons why it's sort of waiting right now. And also Verkor, who are the battery supplier to Renault. So these are top class Western companies. It's not an Asia-facing story. Funding, we've got approximately 300 million. EU has been approved or pre-approved by the European Investment Bank, and we have a bunch of other European banks and export credit agencies. It's the sort of project that financiers are quite keen on in chunks of $50 to $100 million. That's because not only it stands on its own legs, but it's got the potential. We've got a scoping study to grow to over 5 times, over 100,000 tonnes of anode, which has got an NPV of $3.5 billion by itself. The first project's got an NPV of about $1 billion. The environmental community goes without saying. There's no way we were getting permits from anyone without the highest standards around the world. Unfortunately, Australians are very good at exporting our best quality and best practice around the world. And in the EU, we have a lot of momentum now from politicians. Even the media is coming around to realization that minerals are needed for this electricity transition, and you can't keep importing them. Both COVID and the war with Ukraine has shone a spotlight on how poor the supply chains are into Europe, and they're working very hard, and now with the US government, to improve those. So just to wrap up a few catalysts and milestones, the standard process for mining approvals in Sweden is to not have it approved, but then you have a series of appeals that are allowed to be happening. And the next round of those is scheduled to end in the next few weeks in mid-June, and also the decision by the court on our anode refinery. So in Europe, the permitting is a big key, and those things are resolving over the next month or few months. That will also allow the finalisation of offtakes and other contracts and finance to allow for construction to start later on this year. Of the refinery, we don't actually need the mine for a little while, to be honest. We're also very excited about the silicon potential. It's growing really fast. The demand from the customers around the world is going surprisingly well. And the product itself is a very practical, low-cost way of making that product. So we're excited by that. We've also got some exciting new ideas for how to faster ramp up production in future. With that, I would be happy to pass back to Chrissy. Thank you.
Thank you very much, sir. That was really insightful and a great talk. And if you run out of things to go and have a chat with Mark, as far as anodes and all the rest of it, graphite goes, he's got an interesting little add-on to his credentials. Paleontology, what is it? What are you?
Dinosaurs.
Yeah.
Dinosaurs, yes. I went through, when minerals were in a lull in the late 90s, I went digging dinosaurs for a few years in Montana and Wyoming. So I made some discoveries, one which I named after my sister, who was an inspiration for everything with claws and teeth. But no, if you want to talk dinosaurs and nothing to do with minerals, happy to do that as well. It's still chemistry.
I wonder if she's listening at home. Good on you, Mark. Thank you so much. Welcome. It's interesting, isn't it? When you do a little bit of a deep dive on some of our presenters and see what else they've got hiding up their list. This fella up here, he's a happy fellow. Come up and join us, Victor. Victor's a mining engineer. He's got more than 25 years operational and technical experience in multiple disciplines across both underground and also open pit operations. He is representing today Panoramic Resources, and of course they are a diversified miner. Recent news for them has focused on the current cost and ramp-up profile of its Savannah nickel operation. Would you please make him welcome today for his 15 minutes of fame?
Thanks, Chrissy. Good morning, everyone, and it's glad to be back in Sydney again after a very long time. The picture on the screen is our operation that we have in the Eastern Kimberley in Western Australia. As Michael mentioned earlier today, he just mentioned about the energy transition metals, and we are right in the middle of that because it's a nickel sulfide operation. That's what we run, and we mine nickel, copper, and cobalt from this small operation in the backyard of WA. So over the next 15 minutes, I'll take you through the value proposition that we bring. I'll skip through the usual disclaimers. The presentation has also been lodged on the ASX platform. In regards to the corporate overview, our share price at the moment is 13.5 cents. It's a very low base, if you ask me, and I'll talk about that a little bit more. And it gives us a market capitalization of about $280 million. The share price has come down from April last year when the nickel price was really strong. And as Chrissy mentioned as well, as we were ramping up the project, the costs were going up as well, and that brought our share price down. But we are getting to a nameplate capacity later this year, in the next couple of months. If you look at our cash balance at the end of March quarter that just finished, we had $33 million, and that was about $5 million more than the previous quarter. So it's just good to see the cash going up. And during the quarter, we were also able to pay the debt down that we have with Trafigura, who are also our offtake partners for their operation. Our largest shareholder is IGO. They own 21% of the company, and that came about after IGO took over Western Areas last year, which was another nickel miner. Our second and third shareholders are Zeta, and Ausbil, and they're very supportive shareholders. The top 20 own about 67% of the company. We are covered by 4 brokers, Canaccord, Macquarie, Morgans, and Euroz Hartleys, and the research papers are also on our website. Now, I mentioned that we are quite cheap, and the reason I say that is when you look at the nickel sulfide producers in Australia, there are only 4 major companies. And then when you look at the pure nickel players, there are only 2. And last month, Wyloo made a bid on Minco, and that means that only Panoramic now exists as a pure play ASX listed nickel producer. You step back and you look at what's happened over the last year, and you see that IGO took over Western Areas. Then we had BHP move on Oz Minerals. Wyloo took over a project in Canada called Norant, which was a bit of a fight between BHP and Wyloo. And then Wyloo right now are in the middle of a takeover of Minco. And you also see the back end where the end supplier or the end user is now trying to do deals with the companies that mine these transition metals. BHP did a deal with Ford and Tesla, and Vale did something with Tesla as well. So it's just a very interesting space that we are in, and we are certainly a producer with a long mine life in front of us. So let me talk about the project. The project is in the Kimberley, Eastern Kimberley, as I mentioned before. That hasn't changed, has been there for 20 odd years. Our tenement package is what you see in the middle. So IGO is a shareholder who owns 21%, and they also surround us in all directions at the moment. So everywhere we look, IGO surrounds our tenement package. The green bits are the ultramafics that we like to drill and target to find this highly prospective mineralization. The picture on the right is the mine. So the old mine is under the open pit, which is called the Savannah mine. That was mined for 12 years. And during that 12 years, the company paid out about $114 million in dividends. We are now mining the Savannah North mine, which is to the right of it. And that has another 12 years in front of it, which is what we are currently mining. We are also getting some of the remnants from the old mine as well. Last month, we put out our updated life of mine plan. So given costs were going up, our resource also was growing. So we thought we'll update the market. So we have about just under 12 million tons of ore at the moment at about 1.2% nickel. It's got a 12-year mine life. We are going to be producing about 9,400 tons of nickel, around 5,000 tons of copper, and about 700 tons of cobalt. So it's a very healthy, long life mine life. This little project is going to provide about $1.4 billion in cash flow, has an NPV of about $844 million. We have a capital loss at the moment. So when you put that in, the post-tax NPV is quite healthy at just under $700 million. If you look at the graph, it shows you our profile and the cost profile as well, the production and the cost. And the first 2 years are high because you're spending capital, setting up the mine. And the next year, our cost comes down. And then after that, it becomes a production mine. And then it just starts printing cash. Now, just on the mine, if I were to look at the mining and processing, what's happened over the last quarter, our safety is tracking relatively well compared to a new restart. We have all the people and the labor on site after all the issues during the COVID times. Last quarter, we were impacted by weather. There was lots of rainfall in the Eastern Kimberley region. So it slowed our production down, but we still kept a very similar profile to the December quarter. This quarter has started off relatively well, and I think we'll hit nameplate capacity by end of June this year. So another couple of months, we'll be at the nameplate that we've been talking about for the last 2 years. We are seeing labor and fuel. Somebody else mentioned the same thing. The costs are high, but we see that as quite stable at the moment. And there's lots of business improvement projects underway that are actually pushing the cost down. And we should see that over the next quarter. The recovery is pretty good. Like nickel recoveries, every quarter has improved. And the concentrate that we make is very clean, very well sought after by our offtake partner. We sell it to Trafigura, who are a trader, and they could sell it to anyone they choose to. And we get some really good offtake terms from them. So the picture on the right is the old, you see the mine under the open pit is the Savannah mine, which is like the remnants that we are mining. And then you see the Savannah North, which is the new mine that we're opening up and getting ore from. Remnant mining is a little bit slow. It does take a bit of time to get it right. So we asked our geologists to see whether we could find more ore under the existing Savannah mine. And sure enough, they spent some time drilling it, and surprise, surprise, they found another continuation of that ore body. And our geologists, they're very creative people. They could find an ore body, but they can't name it properly. So they called it Savannah Extension, right? So that's what we are getting into. And I'll talk a little bit more in the next couple of slides. So we're a small company, we're ramping up, and last year we spent $3 million on exploration, which is only a small budget. And the geologists, again, they spend the money wisely. They drilled, they found about 5,000 tons of nickel. We converted that into reserves, 3,500 tons. It might sound a bit small numbers, but that alone is worth about $100 million in revenue for us. And we had some really good hits. So we're drilling in the Savannah North mine, which is just under the areas that we're going to be mining for next year. And we had some really good hits. So we're talking 15 meters to 30 meters, 1.8 to 2.3% nickel. And they are spectacular hits. So when I say they are spectacular hits, a couple of slides ago, I talked about the life of mine grade. The life of mine grade is 1.2% or just under 1.2%. So these hits are really good. They'll get converted into reserves in August, and we'll have a better understanding of what we are going to be mining in the next few years. Savannah itself, again, target 1 is the area called Savannah Extension. And you could see some of the hits we've got. Again, 9 meters to 30 meters wide, 1.2% all the way to 3% nickel, right? So great hits. We haven't even finished our resource modeling on it, but we know it's there. So we've actually started developing that area now, and we are planning to mine that or bring it into production from July onwards. So our exploration manager, Andy Shaw-Stewart, he's here today, and he'll be at the booth. He wanted to drill under the 900 fault, which is like an unknown area for us. He wanted to drill a couple of downhole EM holes, just target holes, and then we were going to do a survey to see what lights up to target and drill. And sure enough, the second hole that he put in, which wasn't supposed to hit mineralization, did hit mineralization, which is a good indication. We put those results out yesterday, and again, some really good hits, right? So it's gone from an unknown area to something that is, that's coming along really exciting. And I can't wait to see what he's going to call it, because I have a feeling, I heard him say it's going to be Savannah Extension Extended, which doesn't really sound too well. But anyway, let's see where he lands. But this is basically telling us that Savannah continues and Savannah North has a life on its own. So it's going to be very much a long lead mine life that we are talking about. On the surface, same thing. We've been concentrating so far to date around the Savannah complex. But when you look at the broader tenement package, it's very highly prospective. The Stony Creek and the Northern Ultramafic granulite, these are 2 projects that we drilled last year to carry out downhole EM surveys. We haven't been able to do that because of the wet season, and he's planning to do that in the next month. So we should have a good understanding of what to drill in that area. Frog Hollow has vanadium titanium magnetite. It was drilled in 2018. We haven't followed up with it yet. And again, it's a battery mineral. So we'll just follow that up in the next year. The northern intrusion is quite exciting. We never had heritage clearance in that area. We never had land access agreement there. We've only done that in the last year. The heritage survey is planned next month, and then we plan to drill in that area. And that's got very similar characteristics or rock characteristics to Savannah. So, that's very exciting for us. Now, if I switch to sustainability side, our focus really is to reduce our carbon footprint. So we burn about 20 million liters on the site to run the power station and the underground. We are looking at a solar farm at the moment, which is about 14.4 megawatts, and that will reduce the carbon footprint for us. We're looking at various options. Some are like a lease buy option, but we'll know more about it in the next few months on which way we progress. And once you go with the solar farm, the underground converts to a more electric mine as well, electric trucks, electric loaders. And then that reduces the cooling that we need underground, the ventilation that we need underground, further bringing our costs down. But as I said to our guys on site, one little step at a time. Next year, our focus is we're going to get 3 electric light vehicles underground, and that'll be the start of our electric vehicle journey at Savannah. On the community, we are very engaged with the local communities. There are lots of small communities that we target and work with them. We started off with the Teach, Learn, Grow program, where you spend time with the school kids, giving them a better opportunity. And we've started employing local, trying to bring local employment into the company. Over the last 12 years, we paid about $16 million in royalty, and we continue to do so for the next 12 years as the minimum. One of the local community kids, very good football player. We actually got him an opportunity as a cadet in the Fremantle Dockers team. I'm a Fremantle Dockers supporter. We haven't won a flag, but who knows? This kid could turn the whole club around one day. Actually, there's a Sydney versus Dockers game this Saturday, so I'm hoping the Dockers have a win. So circling back to our value proposition, listen, the mine is in the backyard of WA, safe operating environment. Ramping up is going relatively well, and by June, in another couple of months, we'll be ramped up. The cost profile of that mine is $8.57 a pound, right? Nickel at the moment is $16.50 a pound. So there's a large margin on it. It's going to produce $1.4 billion in cash flow. And as I said, a significant amount of NPV value as well. The bell is going. Thank you very much. That's it.
Thanks, Victor. You spent that time talking about the Fremantle Dockers, so you should focus on the project. All right, our next company is on a bit of a mission. They're led by this fellow chairman, William Johnson. Would you come and join us, please, sir? Now, William is leading the development of 2 world-class battery mineral projects. They've got the Salares lithium brine project, which is located in Argentina, and the high-grade Burke graphite project, which is in Queensland. He's going to join us and explain why Lithium Energy is uniquely positioned and ready for that global energy transformation on not one, but 2 fronts. Would you please make him welcome?
Thanks, Chrissy. Good morning, everyone. It's nice to be back. Lithium Energy, uniquely positioned and ready for the global energy transformation. So what is it that makes Lithium Energy so unique? Well, if you have a lump of lithium one side of the planet and a big lump of graphite at the other and a saline solution in between, what do you have? You have potentially the world's biggest lithium-ion battery. All joking aside, what makes Lithium Energy unique is that we provide investors, through an investment in our company, leverage to the 2 most important minerals for lithium-ion batteries. Both lithium and graphite are and will continue to be for decades to come the 2 most important ingredients for lithium-ion batteries. Lithium has an unmatched energy to weight ratio. It's the lightest metal in the universe, and graphite has unique conductivity and energy density characteristics that's going to make it very hard to replace graphite as anode material going forward. So if you believe in the electric vehicle revolution, then you need to be invested in both lithium and graphite. So starting with lithium, and what makes our company so unique is that if you're looking for a large-scale, long-life, high-margin lithium project, there's no better location than the prolific South American lithium triangle, which is where most of the world's lithium reserves are currently found. Now, this lithium triangle encompasses 3 countries, Bolivia, Chile, and parts of northwest Argentina. Now, no offense to any Bolivians in the audience, but there's a fair bit of sovereign risk at the moment attached to Bolivia, so we steered clear of there. In Chile, the government there has recently imposed some fairly significant restrictions on developing lithium projects, so it's pretty hard to get a new lithium project going there. Argentina, on the other hand, Argentinian government's been very receptive and encouraging for the development of new lithium projects. And lithium brine projects in Argentina tend to be amongst the lowest on the lithium carbonate cost curve anywhere in the world. And we're very fortunate that Lithium Energy holds a prime position in a very established large lithium brine basin. So the Euroz Salar is located in the northwest part of Argentina in a province called Jujuy. Only 3 companies control the majority of the lithium rights to this salar. Allkem, which is an ASX listed company with a current market cap of about $8 billion. Lithium Americas, listed on New York Exchange and TSX, market cap about $3 billion. And Lithium Energy, listed on the ASX with a market cap of $70 million. The size of the Euroz Salar, it's approximately 30 kilometers long by 15 kilometers wide. An approximate area of the productive lithium-bearing area of that salar is about 45,000 hectares. We hold 12,000 hectares of that, or almost 30%. So our holding in this salar is shown by the red areas here. So the yellow surrounding areas, these are the ones held by Allkem. Allkem are currently producing from the production wells mainly located here, and they have their evaporation ponds located here. Lithium Americas, their land is shown by the blue area, and they're producing, they've just almost finished construction and are about to commission a plant just to the south of the picture there. Allkem have a resource of about 20 million tons. They're currently producing at an annualized rate of about 15,000 tons per annum of lithium carbonate, and have just completed or in the process of completing a phase 2 expansion, which will take that production to over 40,000 tons per year. Lithium Americas also have a resource over 20 million tons of lithium carbonate equivalent, and have just commissioned their plant and are aiming to produce 40,000 tons per annum of lithium carbonate, increasing to 60,000. A couple of years ago, before we started exploration of this of our land, we put together an exploration target for our properties that ranged from 1.5 to 8.7 million tons of lithium carbonate equivalent. And this exploration target was based upon exploration results that were publicly available from work that Allkem, who at the time were called Orocobre, had done close to the region. And I'll come back to that exploration target in a moment. So what have we been doing in the last 6 months? Well, we've been undertaking a drilling campaign, and we've recently announced some massive intersections of lithium brines. And when I say massive intersections, anyone that's been to the Eiffel Tower recently and stood at the bottom and looked up, you see how tall it is. Well, that's just over 300 meters. We've encountered intersections of lithium brines over 400 meters. Now, based on the drilling we've done to date and geophysics, which we've done in this area, we believe that the continuity of lithium extends along a 15-kilometer arc, at least, covering our concessions here. So if you can imagine a column of lithium brines, 400 meters, extending 15 kilometers, that provides the potential for a very, very big resource. If you recall the exploration target I mentioned on the previous slide, the upper range of that target was 8.7 million tons. One of the assumptions we used for that target was an average intersection of lithium of 150 meters. So the fact that we're now encountering multiple intersections with up to 400 or greater of lithium bodes very, very well for an eventual resource that we're going to announce for this project. So with a combination of the drilling to date, as well as large intersections, we're getting very, very good grades of lithium, up to over 550 milligrams per litre. The geophysics campaigns that we've undertaken have shown that the brines extend over substantive areas of our ground up to 600 or over 600 meters depth. The drilling we're doing, we're halfway through a 10-hole program, and it's continuing to expand the lithium mineralization further. And we're aiming to announce our maiden JORC resource in the second quarter of this year before 30 June. So we're blessed with a fantastic location, having some really big neighbors who have already proven that the brines from the Euroz Salar are perfectly capable of producing lithium carbonate through the traditional pond evaporation process. As I mentioned before, Allkem have been producing there since about 2016. The LEC are about to start production from there. We know that the climatic conditions and the physical location are very supportive of brine evaporation. There's very low rainfall, high evaporation, and there's excellent supporting infrastructure, which is a real benefit for our project. There's good roads that link the project to the local regional city of San Salvador de Jujuy. We have a large gas pipeline. If I just go back a slide, just a moment. This blue line you see here is a gas pipeline. So this is a gas pipeline that goes from Argentina through to Chile. So we actually have gas pipelines, which are a potential source of power running right through our project. So great infrastructure. And also we've recently found fresh water on our project. Just to this hole here, hole number 3, we encountered over 100 meters of fresh water from near surface down to 100 meters. And fresh water is very, very important when you're looking to the next stage of project development, which is actually developing the project into production. One of the things also that we're very happy with is that all of the assays that we've done of our brines to date indicates that the chemistry is very, very similar to the chemistry which both Allkem and Lithium Americas have. As well as good grades of lithium, we have a very low magnesium to lithium ratio, which has a big impact on operating cost, a big positive impact in terms of it's quite expensive to extract magnesium from lithium brines. So the lower the magnesium to lithium ratio, the lower the cost of production. And other factors, other characteristics of the host material and the brines, such as high specific yields and porosity, are all factors that are positive towards or indicating favorable economic development of the project. This picture here shows some, this is one of our holes from which we're currently extracting and pumping brine from 590 meters below surface. And we've been collecting this brine for laboratory analysis. And we've also been providing it to some DLE or direct lithium extraction companies for them to evaluate for use with their new direct lithium extraction technologies. Back a second. Right. Okay, so you may have heard of direct lithium extraction or DLE. So the traditional way of getting lithium carbonate or producing battery-grade lithium carbonate from lithium brines is through brine evaporation ponds. Clearly, Allkem and the Lithium Americas have proven that ponds work very, very well in this location. We're very lucky enough to have 12,000 hectares of land, which is a massive land holding and more than enough area to build evaporation ponds. However, there are new emerging technologies known as direct lithium extraction, which present potential benefits for extracting lithium from brines. These benefits include the potential to get into production quicker, lower capital costs, and better lithium recoveries. We're very fortunate with the Euroz project in that because of the favorable chemistry of our brines, the climate and infrastructure at the Oliver Salar, and particularly the fact that we have a lot of fresh water and power there, which is what you need for these DLE technologies. We're fortunate in that we believe we have a choice of pathways to develop the project, either with the traditional brine evaporation, which we know works there, or the newer DLE technologies. We're rapidly building a local, very experienced team. We have a team of over 20 staff there already, and we're rapidly building that team as we move from the resource confirmation or resource development stage through the study and project development stage. So next steps for Olaroz, as I mentioned before, we're looking to announce a maiden JORC resource there, which I'm hoping is going to be a fairly sizable and very high quality resource, second quarter this year, so in a couple of months or within 6 weeks. We're also working on advancing technical and economic evaluations of the various pathway or development pathways. We've engaged engineering company Hatch to help us with this process. And one of the things that we've asked them to do is to help us with a trade-off analysis of looking at the development of the project using evaporation ponds and or one or more DLE technologies. Also on our timeline is engagement with potential strategic partners as well as offtake partners, and of course continuing to build local capability, technical capability. Doesn't leave me much time, I'm afraid, to talk about graphite, but our graphite project, which, if you like, is the anode of our battery, with the lithium project as the cathode, sorry. The Burke Graphite Project is one of the world's highest grade graphite deposits. It's based right here in Australia, in Queensland. We've recently completed a second drilling campaign there, and we've defined a very large, high quality resource with over 1.3 million tonnes of contained graphite. One of the great things about this project compared to most other graphite projects around the world is it's located here in Australia. So sovereign risk is very low, and it's reasonably close to Townsville, which is rapidly emerging as a significant battery minerals hub. What's our objective for Burke? Well, we don't want to just dig it up and sell it as a concentrate. Our plan is to produce here in Australia quality battery anode material. We've done a lot of test work so far that demonstrates our material is capable of being produced or converted into purified spherical graphite, which is the key anode material that battery companies are after. Most of this PSG is currently produced in China, and there's a fantastic opportunity as the demand for this material is set to grow tenfold over the next decade for companies like ours in Australia to meet that growing demand and provide purified spherical graphite into the battery market using environmentally sustainable techniques. So we've just kicked off a pre-feasibility study on the Burke graphite. We've undertaken metallurgical test work. Hi, Chrissy, I can see you. We're rapidly advancing that and hoping to get it completed by the end of the year. We've also got a graphite deposit or more resource further south, which is going to be bigger. So in summary, if you believe in the EV revolution, you need to be invested in the key ingredients that make this EV revolution possible. Lithium and graphite, and Lithium Energy provides you with a great opportunity to be invested in both those commodities. Thanks, Chrissy. Thanks, everyone.
I like it. He wasn't scared of me. I must lift my game. I think that wasn't the appropriate response. Thank you so much for that. That was great. Do you know where the highest grade gold mine on Earth is located? No. Our next presenter does, because it's not far from his childhood home where he grew up, where his childhood home's garage has little pockmarks all over the floor where he used to get his little bits of rock and he'd take them in and he'd explore them. Today, he stands in front of you, a fully fledged professional geologist with more than 30 years under his belt and a formidable reputation as well. He's co-founded 8 public companies over the last 15 years, sits on the board of 4 different stock exchanges, and he's raised over US 200 million for exploration. And he's a pretty friendly fellow, as you can see as well. We're going to Victoria and we're going to talk about Southern Cross Gold. But Michael Hudson from Southern Cross, can you tell us where is the highest grade gold mine in the world?
Well, thanks, Chrissy. Hello, everyone. From 2018 to 21, at least, it was in Victoria.
It was called Fosterville, and it doesn't get a huge rap because it's owned by a Canadian company, but it's rewritten the future for Victorian gold, and it's led to hundreds and hundreds of millions of dollars exploring in the state just south of us. And we've got the best discovery since Fosterville that I'd love to talk to you about. So thank you very much for the welcome. So I am the optimist in the room, as I always like to say. You heard about me chipping rocks when I was a little fella, so I've been optimistic for a while. So I'm going to make forward-looking statements, so please be aware. I'm going to talk to you about a project called Sunday Creek. It is a scarce and very high-quality asset. Over the last year, we only listed nearly a year ago. We were the third most successful IPO on the ASX last year across the whole bourse. So it's been a great start, and that is because we've been putting out amazingly high grade and thick intersections consistently. The hit rate that we're seeing in this project is really world class on a global scale. You won't see the amount of gold coming out at this early stage, relatively early stage of a deposit. So I just take your mind to that. We've got a very large footprint. Big deposits have big footprints. We've got 11 kilometres, and we're not drilling in a little area. We're drilling over multiple kilometres. And that high-grade gold mine, Fosterville, really rewrote Victoria's history only in the last few years. And we're standing on the shoulders of giants, both scientifically, understanding how that system formed and how we can apply the same concepts into this new discovery. And clearly our mandate here is to make this bigger. We've got the tiger by the tail. We're not going to go out and blow our brains out and put a resource around this in the very short time frame. We want to make this bigger and make this into a multi-million ounce system, which it's heading towards. Another key point, forget the rocks. We're fully funded. We got, as of last quarter, close to 18 million in the bank. We've got 30 kilometres of drilling ahead of us. We've got 4 rigs turning. We own the freehold land on which this discovery is based. We've got 130 hectares, so it's well set up for us just to continue, fully permitted and fully cashed up. The market cap's around about the 100 million. That cash in the bank, as I mentioned, quite a tight share structure. Our major shareholder, which is a Canadian company that we spun the assets out of, I still share that company called Mawson Gold, has an escrowed position until May next year, so another year. So half the stock is escrowed, so it leads to that tight structure. What is new in Victoria? Victoria does matter. It has mattered. It built the back of Australia in the English expansion of the English Empire during the 1800s, 80 million ounces of gold. And then it became a bit of a disaster in a modern sense. It was nuggety, high grade, and there was lots of failures. And the industry moved post-World War I, post-World War II into WA. And WA still dominates clearly, but Victoria is producing more gold now than it has for over 100 years. 3 gold mines operating, and those 3 gold mines, 2 of them are this new gold. So we call it new gold. It's a later event, technically known about, but really wasn't exploited. The old timers exploited this earlier Ordovician gold, which was 70 million years earlier. Good for the old timers, not so good in a modern sense. So that's what we're focusing on. And then when we focus on this later gold, this Devonian aged event, it does form these bonanzas, and that's what made Fosterville the highest grade gold mine on earth. They transition from gold antimony in the upper levels to these uber high grades at depth, around about 800 meters. The transition occurs, and that's what's happening in this system as well. We're drilling down to 1 kilometer and starting to see that happen as well. So we're standing on the shoulders of giants in terms of learning. Just in terms of some of the metrics, it's very hard to put 24 kilometres of drilling into a 15-minute presentation. You'll start to see some very snazzy rotation of the model and et cetera in a moment. But just in terms of average hits, depending on cutoff, the grade varies between 20 grams per tonne gold equivalent down to 3, and between 10 to 1 metre wide. So, and there's hundreds and hundreds of these intersections through the deposit. But just to give those technical people a bit of a feel for where the grade sits between, it's very high grade, and we've got multiple, at least 25 so far,
veins that have those sort of dimensions. And then just in terms of how we sit, we're the second most populous company on the ASX in terms of the Miner Deck top 10, ranked by gold only. That picks the best gold intercepts in any 1 week when they're released. So we've had lots of them, and we're top of the pops there. Now, this is where the magic starts. If I start to rotate things a little bit too much, there's bags at the back for you to grab. But this is a nice little presentation showing the situation of those green deposits, which are the earlier style of gold, that Ordovician. The orange is what we're after here in Victoria. Fosterville is here, this little orange deposit here. We're down over here. The reason for that is if we take a crustal look, we're going to go from the very big scale down to the detail, where above this orange rock here, which is essentially this Selwyn block, forms these later deposits. Well known in the science, but you've got to know where you're looking in Victoria. You can't be anywhere. You've got to be above that Selwyn block, which sits 10 to 15 k's below the surface. Zooming in now, this is just a 20-kilometre scale down here. This is our 100% owned permit here. Fosterville sits up here. Costerfield is here. We've got the long strike extensions at Redcastle and Ruin, 2 other projects. But all we're going to talk about today is this Sunday Creek project, where we got the 4 rigs turning, but not forgetting we've got other epizonal style deposits. So just zooming in on that project that we're going to focus on. Big footprints have big systems. I've said that already, but this is at least a 10 to 11 kilometre trend. This is the trend that we're working on. The only drilling up until a few weeks ago was in that little square. Never a drill hole along the trend, despite there being mines, extensive mines. All those little blue dots that you can probably see there are all old mine areas defined by LiDAR. We just started drilling out here into the bush 8 kilometres away, but the key focus has been here. If we zoom in a little bit further, you can start to see the trend with all the old mines. The only drilling has been in this area. This is our freehold land essentially in this area also. So all our drilling today has been on our freehold ground, but it does extend out through this way. And if we just take a look on the controls on mineralization, this is the LiDAR. So laser beams shot out of an aeroplane 600 meters above head, but some of the laser beams go through the bush, excuse me, and hit the ground, and then we get centimeter accuracy. And this maps the old mines essentially so well through that scrub. So what I can see here is an east-west trend to mineralization, and the old timers pits are at this northwest orientation. So it forms essentially a ladder where the high grades are mined at a high angle to that east-west trend. And if we zoom 3 kilometers away, never a drill hole, out here, you can see the LiDAR showing the same thing, that east-west or northeast trend with these northwest veins like the ladder that's forming. So we can see just even the old timers gave us great information on the structural controls on high-grade gold. We're going another 8 kilometers now. This is where we're drilling out in the bush as we speak. No results released, but you can see again over half a kilometre or to a kilometre, the same thing happening. So a very good indication with the soils, with the old time mines, that the same system develops over this large area. Very similar to the Fosterville footprint, actually, 11 kilometres of old mines there. It was producing at 40 grams in the day a few years ago, now producing at 20 grams head grade. It's still producing 500,000 ounces a year at sub $400 cash costs. So they make very nice deposits. Now let's just go underground. And now we're looking at a 1.2 kilometre area that has been drilled predominantly over an 800 metre focus by ourselves in this little area here. You can start to see the very high grades we pulled out. Anything above 20 grams gold is in these pink dots. The other assays are there. You can start to see some of the underground mines. For example, just to give you scale, this mine here went to 180 meters depth in the 1800s. So they mine these things with some intensity for themselves. The yellow holes are what we've got in the lab. Southern Cross always has holes in the lab with 4 rigs operating. Always got drill results imminent. So keep your eye on the news flow consistently. The black holes are those that we produced the results from. And you can start to see that we're really testing this system down to about that 1 kilometre depth there. So we're really starting to look for those uber high grades at depth that change Fosterville's story. In terms of the controls on the gold, it's no good just hitting gold if you can't make it hang together. And what the hang together is for us is these northwest structures. You know, I showed it on the LiDAR with this east-west trend and these northwest veins that we saw in the LiDAR, and that's exactly what happens at depth. So we have these multiple veins that we're drilling, that they're all contained within the one host that we can define. I'll show you in a moment, but there's a hell of a lot of white space, or gray space as it is here. So we can see big gaps all through here, right through here, and even continuing, you know, up to 10 kilometers that way. So a hell of a lot more work to drill these white spaces and extend these zones to depth. So that's what we're doing. Our strategy is to make this bigger before we drill any one specific area out to a mineral source. You're going to make money in this stock by us making this bigger, not by limiting the vision. And there's a hell of a lot of opportunity at multiple levels to make this bigger. The other way to look at this is that for the technically minded, that green rock here that looks a bit sinuous is the host. It's a dike breccia host, which those veins fall within. The lighter green is the antimony halo that I'll just speak a little bit to the antimony in a moment. But you can see the controls are well understood and a hell of a lot of more drilling to do, both to depth and along strike. With us fully funded, we're well positioned to do that. For those of you who read our press releases, you can take this presentation, which is on our website. You can turn layers on and off. We only put the 2D presentations in our news releases, of course, but you can start to see how those cross sections work, how it all hangs together with the dike in green there and the bright red veins and the drilling, and you can see level plans, etc. So we're starting to find continuity in this deposit. We're starting to extend it greatly to depth and along strike, remembering that we're not only just drilling with 3 rigs in this area today, but and another rig out here 7 kilometers away. Lots of news flow to continue. Antimony is about 20% contributor by value, in situ value. It was a key strategic mineral, critical metal back in the day in the European wars in the 1870s. This deposit was turned on even more because there was more antimony needed in Europe at the time. Even during World War I, the Munitions Act of England demanded the colony turn up its antimony supply, of which this is one of 2 deposits. So it's been a critical metal for a long time. It is today. It's one of the most critical metals on any rank if you look at Japan, UK, US, Australia, etc. This will give us the political capital to develop this project as much as a very nice potential byproduct as well. Can't be anything without the rocks, without the money, but you need the people. Getting good people in any business is hard. We've got a bunch of very good people locally based, and here's a picture of them, board and staff. Lots of drilling basically to come. We've got the 30 kilometers of drilling, 4 rigs. We'd like to go to 5 shortly once we bedded down that 4th rig. A real drill focus. We are doing a lot of proper work in the background beyond that drilling. We're doing met work. We're doing environmental baseline studies also. So please come along on the journey. Keep your eye on the stock. We've got a lot more drill results coming immediately right through the year. This is a great asset, getting hit rates that you rarely see in the business. And our strategy is to make this clearly bigger. So thank you very much for your time.
Thank you, sir. And you managed to distract me from my time clock with your flash graphics as well. Other people will be worried. Did you enjoy that presentation, everyone? Yeah, but puts a little bit of a spin on it. Well done. And a big act for you to follow, Bruce Maluish. Come on up here. So Bruce is the MD of VRX Silica, and he's bringing to VRX nearly 40 years of mining resources experience, a range of strengths, and they include establishment of new projects, successful fundraising, and also a style of management that really it meets corporate needs, it meets best return to you as investors. And he also has a really good reputation amongst his staff and his team as well, which is really pleasing to hear. VRX Silica has pivoted. It's an operation with 4 silica sand operations for export to Asia Pacific, glassmaking, and also to foundry industries. There's lots to talk about in silica sands at the moment. I actually just drove past your operation on the way back from the Murchison recently, and it just reminded me of how close it is to major infrastructure and to the port as well, which of course you're making use of. Would you please make Bruce very welcome, everyone?
Thank you, Chrissy, and thank you, RIU and Euroz Hartleys. It's good to be back here. I'm here to talk about silica sand. It's a product that is not well understood, but you're completely surrounded by it all the time. You're using it all the time. I mean, in your home, with the windows, paint, lighting, all the tubes, light globes, LEDs, your benchtop, probably engineered stone benchtops, fiberglass bath, TV, laptops, phones, monitors, LCDs, building cladding, all the plastics within your house, the light switch, insulation, containers that you use, in your car, the glass, obviously, in your car, maybe more if you've got a sunroof. Electric cars, it doesn't matter how much, whether it's electric or internal combustion, you've got the same amount of glass in the car. The headlamps, the LEDs, the LCD displays, the paint, the tires. Tires are about 50% silicon. Casting molds for producing the heads, blocks, and manifolds all require silica sand. And when you get into the renewables industry, well, solar panels, the piece of glass at the top, the cover glass at the top is very high-tech glass. Not only is it ultra clear, but it's got to withstand hail. And you need very high-quality sand to make those. And there's usually a piece of glass on the bottom of it, of the solar panel as well. But more interestingly, high tensile yarn for fiberglass. Now, the wind turbine blades are an aluminium frame with a fiberglass coating on it. And that's very high-tech fiberglass. It's actually very high aluminium included within it. It's a high tensile yarn that you use to make that fiberglass. And that's mainly because every time they whack a bird, you don't want to put a hole in the blade. But we've got lots of silica sand. And we've got 5 projects in Western Australia. They're multi-decade. They're there for, we've got 100 years production at a number of our projects. And these are the largest and also the most advanced non-private silica sand projects in Australia. So we've got mining leases granted over a number of the projects. Arrowsmith North is leading our timetable, our production schedule. And really, we're using it to set a number of precedents. And it's quite remote, so it's got less scrutiny, but it's also got a type of vegetation which we think we can more easily rehabilitate. And it will set a number of precedents for all of our other projects. Every time we conduct a study at Arrowsmith North, we duplicate those studies also at our other projects. And there's enormous interest from customers in Southeast Asia. Southeast Asia is running out of sand. It's hard to believe, but desert sand doesn't meet the criteria for producing glass or in producing concrete either. Beach sands are predominantly calcium carbonate. So where you come across sand all the time is not suitable for all the products that I just ran through. So the company is based in WA, all the management team is in WA. It's low impact mining and processing. The processing is very simple, and the mining, you can't get a whole lot simpler. It's a number of front-end loaders. But more important is the access to infrastructure. This will be, a part of it will be a bulk export to Asia. So you have to have access to ports. And as we've selected these sites, actually, we've selected them because not only are they granite-based sands, which is where you get the best quality quartz, which ultimately makes up silica sand, but we've also selected them because they're next to railway lines. So we've got rail access to ports. So it's a great logistics chain. And these are very, very long-term for export, but also we're looking at manufacturing glass in Western Australia. There is no glass manufacturing in Western Australia, and it hasn't been for about 50 years. And it was even then it was small scale. So there is a demand, and I'll talk about that a bit more. Arrowsmith North, it's the most advanced. We've got about 220 million tonnes in reserve. We're looking to produce 2 million tonnes a year. It's suitable for making flat glass, like your windows, container glass, and also automobile glass. So there's quite a large market for it. It can't make solar panel glass, but one of our other projects can. So a 2 million tonne a year plant. We've got 100 years of production at this project. Access to a railway line. The Eneabba to Jordan line used to be used by Iluka to transport mineral sands concentrate. It hasn't done for quite a number of years. We've got water, which is very important when it comes around to processing silica sand. And we're right next door to the #1 highway. And we've also got potential here to have a hybrid power supply. There is no doubt that the greatest hurdle we face on any of these projects is the environmental approval. We're well advanced with Arrowsmith North and also with Arrowsmith Central. These are very large areas. The actual mining lease is about 1,000 hectares. We're applying for about 380 hectares at Arrowsmith North, which is about 30 years production. But it's 380 hectares, and the EPA has never approved a project of this scale in Western Australia in the Perth Plain before. So it's copying a lot more scrutiny, but we're well down the track, and we expect to get that hopefully in the next 2 or 3 months. Part of what we're doing here, it's quite unique. It's a method of rehabilitation. Ridiculously simple when you look at it, but what it does is takes a sod of topsoil out and you place it immediately behind you to where you have been mining. So the topsoil is exposed for minutes, and it largely keeps the topsoil and all the microbes and fungi and all that sort of thing in the topsoil, keeps it relatively intact. And it is by far the most superior rehabilitation method, certainly when it comes to sand mining. Arrowsmith Central, it's started the process as well. We've had what's called an ESD, a scoping document, sitting with the EPA now for about 10 months. That doesn't seem to be moving very far while they keep looking at Arrowsmith North. But Arrowsmith North, it's this vegetation. It's called Quangan Heath. It's only about waist high. As you can imagine, you're not going to get big tall trees in loose sand, and our way of mining target here is in fact just loose sand. But the roots are very shallow. They do 200-300 mil. So when we take this sod out, we've got a modified front end loader bucket that takes out 400 mil at a time. So you largely keep all the roots intact as well. This is a new prospect. It's just south of Arrowsmith North. It was just announced this morning. It adds about 200 million tonnes to our portfolio. So we've got about 1.3 billion tonnes of sand. So we've got lots of it. We've actually taken part of the Arrowsmith North resource, and it's now been included into brand. It's right next door to Arrowsmith North. It's a future development. What we have recognised, it takes a long time to get approvals for these projects. So this one here, we've applied for a mining lease here. It'll sit there for a while. It's something we're going to deal with, but we'll keep it in mind and slowly start the process for approvals here as well. but it's got the same access to water and the same infrastructure as Arrowsmith North. Milne is large scale. It's a couple of 100 million tonnes again, but it's much higher grade. And from this, we can produce a sand at 99.9 up to 99.95% silica dioxide. But more important, when you get into very high grade silicas, to make ultra clear glass, you need to lower the iron. Now, getting iron below 100 ppm Fe2O3, you need to, if you can get below 100, you can make ultra clear glass. We can produce less than 100 here. So it's this is highly sought after. You can imagine the solar panel industry is growing at 30% per year. Every glass manufacturer in Asia wants to be making ultra clear glass. And to make ultra clear glass, you need very high grade silica sand. This is one of a handful of deposits in the whole world. So it's a world-class deposit of very high grade silica sand. We'd like to be making high ultra clear glass in Western Australia. As it happens, the ingredients for silica to make glass, you also need dolomite, lime, soda ash. Lime and dolomite we've got in Western Australia as well. And with LNG, we can produce soda ash. Also, Western Australia is now the cheapest LNG in the world. So it's a good place to be making glass. We've been talking to a number of the major glass producers in Asia to try and entice them to come down and build a glass plant. Our processing plant for the silica sand is around 50 million bucks. Glass plant, 500 million, which is a little bit out of our league. Also, we don't have the IP in Australia, so we'd like to get somebody there. Milne is a bit different. It's got these banksia trees there, but it's the low sedges and grasses that'll be suitable for the what we call VDT, this rehabilitation method. And it's the grasses and sedges that are the recalcitrant shrubs here. So it deals with them far better than any other way. Processing, quite simple. The key to this is attritioning. Now, attritioning is an agitated slurry where the grains rub on each other and you polish each of the little quartz crystals, which is your silica sand. And the rest of the circuit's just taken all the bits and pieces that you've rubbed off. So it's a simple process. There's flocculate in the thickener so we can recycle the water, but otherwise there's no toxic chemicals involved in here, just lots of water. We take our ESG responsibilities very seriously, and we have quite a number of opportunities here at the planning stage to deal with a lot of the ESG issues. We spent a lot of time dealing with stakeholders. There aren't many stakeholders, mainly native title claimants and the state. But all the local community, we're in good communication with them. And we've got an opportunity to, in fact, get a power supply. It'll end up being a hybrid power supply with solar panels, but probably better than that. We're able to get access to, we're right next door to the Waitsia gas field. And so there's an opportunity here to put a power station right at the wellhead. And to reticulate the power to us. So it's probably the cheapest power solution you can possibly think of in Western Australia. With our rehabilitation method, we're going to trial quite a number of different methods involved in that we'll keep trialing to produce the best outcome we can for rehabilitation. We've got a number of other initiatives. We've been sort of shortlisted for a state government grant, and where we can take very high grades, we can actually take a cut of the Milne silica sand that is around 80 ppm, and we can grind it into a flour. And the main market for that is LCDs. Critical Minerals Prospectus, we were published in that just before Christmas, so we've got a lot of government support for what we're doing. The trials of VDT, that'll be undertaken in the next few months. We've also applied for 3 geothermal permits. We'll see how we go getting those, but they've been sitting there for the best part of a year. Very experienced team, all been involved in mining and exploration for quite a number of years. Corporately, we're market capped at about 60 mil. The share price keeps on drifting off. When we're in this EPA process, it's very it's a time-consuming exercise, but we don't spend a lot of money. But we think we're in the right time and the right place. And silica sand is one of those products that it's hard to believe, but the world is actually running out of silica sand. It's the most used commodity on the planet, 50 billion tonnes a year. Most of it goes into concrete. But we've got good, great infrastructure in Western Australia, and it's the ideal place to do it. And we've got access to ports, and we're fairly close to Asia, where the bulk of our export sales will go to. So thank you very much.
Bruce, say your last name for me, please.
Maluish.
Maluish. I put the U in the wrong place when I was printing it up, and I looked at your face and it fell. So I apologise profusely.
Okay.
Bruce Maluish, please make sure you go and have a chat with him. As you're leaving the room today, can you do me a favour? Grab your phones and then spread the word as you walk around. We've actually got an online code, so our online poll. So if you get your phones and just point it at the screen, and then click the little button at the bottom. And I think we'll have the code as we walk around as well. Please, for those of you who are new to the conference, do not panic about there being a shortage of food. We don't have a shortage of food at these conferences. And Stewie, I know you're watching from back at the head office there. He's made sure there is more than enough to accommodate everyone. But if you can click on that, and then what we do is we have got a question, and we're going to bring that question up before every single break. And then, as I said, Euroz is going to utilize that information and put them into some sort of a table. You can do it anonymously, so we're not asking for your name. This is just your opinions. There is no prize at the end, except for the, the joy of being involved in something as we go over the next 3 days and see what our collective intel says. So our first question is, what percentage of the world's energy is currently derived from renewable sources? So that's our first question. We will have 9 questions as the 3 days progress. Go and enjoy your morning tea. And when we come back, gold, 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 and 6 presentations from companies. Thank you, everyone.